And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, everybody, and welcome to the Market Forecast. Today is Thursday, September the 23rd. I'm John Hoagland. Thanks for trusting me with your time as always. Context, risk management, and patience are always on our mind here at the Market Forecast. Just sitting here thinking about the things that we've accomplished this week. We've put a lot of business behind us. Actually, we've got the equities rollover done, crude rollover done. Nat gas rollover, we should be rolling over today. It's okay if you're still trading October, but November will have higher volume today. We've got the FOMC meeting behind us. Now this morning we've got jobless claims out and some more information due out. We'll talk about that shortly. And we put summer behind us. It's now officially fall, and it went from 80 to 55 like it saw a state trooper. The temperature. It's a little bit chilly out, so I do like fall. I'm looking forward to some interesting opportunities in the markets this fall, as always. September and October tend to be a little bit more volatile, and I know a lot of folks will be happy about that. Just stay patient. Stay patient. This morning, 7:30, the jobless claims came out. The last week's were revised higher. This week's came out higher than expected. The initial jobless claims, we were looking for 320,000, came out 351,000. Lots of chatter on trading boards and Twitter about that. Continuing jobless claims was also higher. They were looking for 2.65 million, came out 2.845 million. So not good news as far as jobless claims are concerned. 8:45 this morning, we're still looking for the PMI composite flash, just to look into the PMI composite. 9 o'clock, misleading indicators. We always called it misleading indicators on the trading floor. I still call it that, but it's leading indicators at 9 o'clock Central Time, and 9:30 Central Time, the nat gas numbers due out. Global markets seem to be extending the recovery from the drop that we've had recently. China has injected a whole bunch of liquidity into their economy. Evergrande seems to be getting a stay of execution, at least for now. Fed, we had the Fed meeting yesterday. We're all aware of what was discussed, and the market seems to be comfortable with, perhaps the beginning of some slowing of the bond buybacks, and talking a little bit earlier about raising rates into next year. But the markets are absorbing it. We've got to remember how resilient these markets are. Norway and Brazil, the first to raise rates, I believe, since the beginning of the pandemic. Norway raised it 25 basis points. Brazil raises their interest rate 100 basis points, an entire percentage point in one day. It's going to be interesting. Citigroup, we've had a lot of requests, and we're going to be talking more about nat gas, and boy, it sure seems like it's a good time to add that to the quiver. Citigroup has warned that natural gas shortages and European inventories, as low as they are, with surging demand, are creating a perfect storm. They're talking about $100 per million British thermal units, BTUs, and as a possibility. Now, when you look at that, that's the equivalent of crude oil at $580 a barrel. I'm really hoping that does not happen. It's going to be a very long, cold winter if that is the case. So we got to figure out some ways to get some more nat gas, right? As always, make sure you like, share, comment, question, feedback, and heckling are always welcome here. And subscribe to our YouTube channel so you can get notifications when we do go live. A brief look a few minutes ago at the VIX, the dollar index, and the 10-year yield. VIX is down 10% this morning, back down below 20 at 1939. We've got the dollar index off a little bit this morning as well, 93.11, and the yield on the 10-year, you could probably expect it would be up just a little bit this morning, 1.35%. As always, we got to say good morning to everybody. My brother Rick is first in the room. Rick, you win the prize this morning. Good morning. Good to see you as always. Stephen, Brian, Harry, Tanya, good morning. President of Minions, good morning. There's a new name. Welcome to the Market Forecast. Eddie, good to see you. Vince, my guy, how you doing? Janus, Jim, James, Eric, Cam, Nick, Alman, Ray, Ryan, Jason, Bill, good morning. Laura, good morning. Drew, good morning. George, good to see you. George, Subconscious, John, Tyson, Jerry is awake. Hope John is too. Greg H., Dr. VJ, good morning. Frederico, Spencer Rhodes, good morning. Traders, Nelson, good to see you. Chris, value area high, different for 30 and 5 minute. Electronic trading is anything but perfect. They should be relatively close, and all levels are really treated as zones in futures trading. And good morning. Beetlejuice, good morning. I'm not going to say that 2 more times. Zerain, good morning. Mr. Shine's Mystery Channel, good to see you. I don't know if I've seen you for a while. It's great to see you back. Robert S., Andre, and UG, good morning to everybody. So, we've taken care of business. Eric, good morning. And Gabo, good morning. And let's dive in to the charts, as always, starting with the daily in Crude, just going left to right. No particular order. One bite, everybody knows the rules. Okay. Hello, Mario, good to see you. All right, crude oil. So, let's get the daily up here. I thought I had it up here, but I do not. So, we've got EIA announcing a 3.4 million barrel draw yesterday, bigger than expected, not as big as the whatever the other thing is, API. There it is. Oh my goodness. So now, we had a pretty decent up move. We had some pretty decent volume. We added some pretty decent open interest yesterday as well. Rollover's over. We can start to look at some of we can start to look at some of more of that information for the next 3 weeks because, of course, rollover is behind us. So we did see some potential, buying coming into this market, but we're still in balance and largely in short time frame control, I'm afraid. I believe that is probably going to be true. We did see some hints of longer time frame buyers yesterday. Delta was negative at the end of the day on an up day. That's usually a sign that we've got maybe some bigger, stronger buyers just placing bids and accumulating some longs. Tomorrow, today we see that there was an additional 9,700 in open interest, which supports that. So if we've got longer time frame buyers in this market, they're going to probably end up getting the short time frame traders too short at some point, and we may see this market go back up, test last week's high, and perhaps even points above that. Technically, it's set up to do that. Fundamentally, it seems set up to do that. Let's take a look at the 30-minute chart. Okay, we were kind of coming into this session here. Settlement is 72.23. We were kind of looking at things this morning about 6:30 as maybe a little bit of short overnight inventory, kind of trying to hold back in yesterday's area of value. Obviously, they were not able to do so. So we're basically opening at yesterday's high at settlement, no overnight inventory with which to work with. So I'm going to, probably be looking to stay a little bit patient here this morning. If we get a chance to see if we can reaccept inside value, that might be an interesting area where we might find some fish. The market seems to be coming off here. Can't see if the opening range is the high of the session, but short time frame control. Did we have a late spike yesterday? Did we have a late spike? Did we open in or above the late spike? If that is the case, then that's indicating acceptance of higher pricing. Here's the profile from yesterday. Here's our late spike. This K period here. How did that move? There it is. This K period here, and we closed at 23. So really at the base of the late spike is where we closed. That's where settlement is. The last trade was 72.26. We've opened in or above the late spike. We seem to be rejecting this area, but I'm going to be, because of the late spike and the assumed or nuance of acceptance, I'll be looking to buy weakness in this market today unless it proves otherwise. That's going to be my primary hypothesis for today, is to look for an opportunity to perhaps look for a long. I'm not seeing value on the TPO chart here. No, there's another thing. Electronic trading is not perfect. So let's go back to the 30-minute chart. Fred is agreeing, yes, there was a late spike, and right before the market opened, we opened in that late spike. It's not a very long one, but still, the fact that the market is testing it is indicating a potential for acceptance of higher pricing. So I'm going to be looking for opportunities to buy weakness today. And if I get it, remember, I'm always thinking risk management, risk first, risk management, very important to me, very important to all of us. So if we get the opportunity to find a weakness with which to have a chance to limit our risk, that's what I'm looking for today. In crude oil, E-mini S&Ps. All right. Let's make this big. Okay, so volume yesterday wasn't all that great in futures. It took all day long for the volume at the New York Stock Exchange to actually increase above the previous day's volume. So the volume wasn't all that impressive yesterday. We lost 8,200 in open interest, indicating lower volume, loss in open interest on an up move, short covering. Short covering is what that indicates. Okay, if we've got some short covering, that's going to take buying power out of the marketplace. But we got to remember, these markets are extremely resilient. We've got a whole lot of information now behind us. We're digesting that information, and without bad information, not bad information, but not without information that is bad for the markets tend to just continue to grind higher. So we may see some shorter time frame traders always looking to catch the big down move, getting caught short and seeing this market grind back to the upside. We've got our 50-session exponential moving average, which was very supportive all year. We broke out below it. We're back testing it from the other direction here. Is this going to be resistance? Okay, that level for that exponential moving average is 44.0890. 4,400 was a big number for a lot of people, kind of thinking that was going to be the breaking point for the move to the downside. Well, we've got our move to the downside. We've fallen into balance to some degree here. No bad news. Market can grind higher. However, take a look on this 30-minute chart. Okay, we're not going to see everything, but we've come off the highs, basically one time framing lower. The last two sessions, we've begun to create a bear flag. In other words, we've got some ranges, larger ranges, but still creeping in the opposite direction. I'm looking at last week's low as a really kind of a pivotal level. We've got a naked point of control. we have not yet been able to close this gap in regular trading hour sessions. What are we doing? Well, if we are going to be looking for shorts, we're going to see probably some convergence here with this trend line, which is a loose trend line. I like to sometimes put my trend lines on the highs and lows of regular trading hour sessions. So I could actually move this, not there. I want to go like this. So to regular trading hour sessions, we've got a much more stark opportunity here, perhaps. So I'm going to put this back down here for now. Overnight longs. Okay, opening above value. We've got some time here. We've got about 14 minutes before they open. If we manage to open with a gap and we start to test this area here, I'm thinking we're going to find some fish there. Okay, this is kind of my primary area that I'm going to be looking for opportunities today. If we can't hold above it, we may see this market come back and return back to this near this low, this trend line. Remember, if we were to put this back up here, we're at that trend line. If we were to keep it down here, there's a little bit more space down below. The primary area to look for fish is going to be up here today, if we even get the opportunity. You can see that the market took that look in the overnight session. We still have a naked point of control. We still have last week's low there. Seems to be a nice convergence area. I'll be looking for some pretty decent fish there. Some nice walleye, a couple of good sandwiches. Take a look at the Nasdaq. Yeah, if you're looking at the Elliott zigzag, yeah, it's perfect, right? All right, Nasdaq now. Nasdaq has been holding up better than the S&Ps. Low volume yesterday. Again, we added about 1,000 in open interest on this move to the downside. So not only did we probably cover some shorts, we may have added some new longs to this market. We've got our 20-session exponential moving average, a direct hit in the overnight session. We've got the 50 session below. This is where the Nasdaq is presenting as a stronger market than the S&Ps. We're still wrestling with coming back above the 50 session moving average. We're above it in the Nasdaq, testing the 20 session exponential moving average on the daily chart. Still holding up better. Volume was low, open increase, price back above weekly kickoff low. All those are positives for possible continuation as long as we hold up above that weekly kickoff level. So we have a similar situation. We've got a potential bear flag here. So if we're going to be seeing that bear flag come to fruition, we're going to want to see some acceptance and some volume and all that good stuff below this trend line. So we're seeing a potential convergence here in the day session with this trend line and weekly kickoff low settlement 15,163, weekly kickoff low 15,160, 3 points, 12 ticks above this level. So I'm looking for potential fish at weekly kickoff low. I'm looking for potential fish at this trend line should we have that opportunity to see the market get down there. And I might be even looking for some fish on the other extreme of this potential bear flag. Oh, there we go. Up there. So I think there's going to be a lot of opportunities, a lot of places to find cheap trades, cheap opportunities, areas where we're going to be up against levels that we're going to be depending on, and if they fail us, we're going to find out cheaply. We're going to find out quickly and cheaply. Okay, let's go on to the gold now. Got 10 minutes. Okay, volume. Yesterday, when we look at the 30-minute chart, it was like 90% of the volume happened in the 1 o'clock and the 1:30 bars after the FOMC meeting yesterday. We're still kind of in the spell of a head and shoulders, which again isn't necessarily true. It should be an inverted if we're going to be bottoming out here, but we're kind of range bound here. The opening range has been left at the up at the high of the session today, so a pretty decent opportunity. But again, we're still relatively range bound here. Opportunities might lie down at the last week's low. It was supportive for us on Monday. We may see an opportunity for us down there today. We added 2,200 in open interest on an overlapping to higher range. Did we bring in some buyers up here, or did we bring in sellers? We may get a view of that on the 30-minute chart to see how the day regular trading hour session went. We know that it was pretty boring until 1:30 or 1 o'clock, and then all the volume came in, and we had the knee jerks every direction. Yesterday, here, let's just go to the 30 then. So yesterday, here's yesterday. Just kind of grinding to the upside. The number came out, knee jerked higher, jerked lower. Settlement is all the way up here at 1778.80. Remember, it settles at 1230. So all of this participation happened after the regular trading hours. Look at all the volume. All the volume is here. And there's nothing really going on during the regular trading hour session until this happens. So I'm thinking that the additional 2,200 in open interest was after the knee jerk. We had some sellers come in and push this market lower, which says if that is the case, we're opening in range and in value near the low of value. We left the opening range at the high of the day. We're now we got another Vinny bear flag that we've broken out of. So this is a potential big move down here. If you didn't catch the opening range trade, I don't want anybody trying to pick bottoms in this without some sort of structure. We've tested down to this point of control. We've got more visuals down here, down at this point of control, and we've got last week's low below that. So there is, some potential for this move to continue. Every time I say I don't want to step in front of it, I end up putting in the low, but you just don't want to fight a directional market. 1, 2, 3, it's one time framing lower. Don't try and jump in front of it. Be patient, wait for opportunity as the day goes on, which may be a little bit thin because gold has been directional early and then just falling into nothingness at the end of the day. Yesterday, of course, is an exception. There was an important number came out. Okay. Oh, man. That was a heck of a nice move in gold. To the euro. Opposite gold. Weekly kickoff low respected 2 days in a row. Respected yesterday, respected last night. We only added 2,200 contracts in open interest yesterday on this move to the downside. It was pretty decent volume, but nobody cared. So this looks like a classic double bottom. We got price moving down to here. We got a low here. We go up here. We have a higher low here. Are we going to start to move this market back to the upside? Very well, it could be. Take a look at the 30. Look how attached it seems to be to last week's low. Last week's low, still here, and we have the push to the downside against weekly kickoff low, and here we are, right back to last week's low. So, what do? Well, we're in range. We're in value. Stay patient. Wait for better trade locations. The 10-year. Okay, we've been kind of watching this market coiling. It is potentially getting a breakout below this area of support here. We take out last week's low. I think there could be some considerable space down below here. it's all about acceptance outside of our triangle. We've got a speed bump here in last week's low. If that doesn't hold, and we see some acceptance below that in volume. I hate when I do this. I'm sorry. Hang on a second here. So here's the 30. 3 days of range, knee jerk, settlement, 132.31. Here again, testing weekly kickoff low, a naked point of control check down here, straight to last week's low. We've got more naked points of control down below that. Visuals for the market to go down and recheck. Critical area here between weekly kickoff low and last week's low. There's going to be some fish here, direction of course, unknown. Let's take a quick look at the nat gas. Okay, we are still doing some research, looking at how this market reacts and responds. I'm going to be formulating some weekly kickoff levels for it this week. So we'll have a little bit more reference over time as to what we're thinking about the nat gas. 30-minute chart, however, no real overnight inventory until just before the open here. The market, opening in range, in value. No real reason to get too excited about anything real early in the session here. However, last week's low is right here. We've been showing some resistance to that. If we show sign of acceptance above that, we do have lots of things to fix above. We've got a gap right here. We've got another naked point of control up here. So this is another area where I think we're going to see some fish. Direction, again, unknown. We're going to be using this level here to limit risk. All right. So I've got to really start thinking about maybe starting this a little bit earlier, because I feel like I'm rushing through a lot of this, and I don't want to have to do that. I want some time for questions as well. So we'll give some thoughts around maybe starting the forecast at 7:45, which means I'm getting up even earlier. But that's okay. That's okay. I'm hoping everybody has a really good trading day today. Let me give you the link for today's futures 301 class. We are going to be discussing, what are we discussing? Volume and open interest. We're going to be focusing on really those two factors in the auction process. Spencer says 7:45 would be good. Well, we'll talk about it, and I will let you know if that decision has been made. Thank you, Drew. Ricardo, 7:45, fine. Subconscious, thank you, everybody. Okay, take a deep breath. Humble, grateful, and creative today. Get out there and profit. Have a great day. I will be back with you for the recap today. Not only will I be doing the class, I'll be doing the recap at 3 o'clock. So we'll see how these markets have treated us. Get out there and profit. We're looking forward to your success. I will see you in the pit in about 1 minute. Trade well.